Have you ever thought about activating the commodity segment? No, right? Or let me guess, you have already activated it, but you're not using it. Why? Because you might not have a lot of information about commodity trading, which is why you probably never traded in this market before. And whenever we discuss trading, it's usually stock trading that dominates the conversation. But in today's video, which is all about commodity market, you're going to gain a new perspective on trading. We'll discuss what is commodity market, which organizations regulate this market, the different types of commodities you can trade, and the exchanges where this trading happens. We'll also talk about why to trade in commodity markets and how you can invest in it. First off, let's define what the commodity market is. In simple terms, it's a marketplace where you can buy or sell raw materials and primary products, ranging from natural resources like oil and gold to agricultural products like wheat and coffee. Did you know that in India, the commodity market is regulated by the Securities and Exchange Board of India, or the SEBI?
Forward Markets Commission will be history. For the first time in 140 years, commodity markets will have a modern and an autonomous regulator in SEBI.
Following its merger with the Forward Markets Commission in 2015. That's right, ensuring a regulated and safe trading environment. Moving on to the types of commodities available for trading, we primarily have two categories. Hard commodities, which are natural resources that are mined or extracted, such as gold, silver, oil, and natural gas. Then we have soft commodities, which include agricultural products or livestock, like corn, wheat, coffee, and cattle. In India, commodities are traded on several exchanges, like the Multi-Commodity Exchange, or the MCX, National Commodity and Derivatives Exchange, or the NCDEX, and the Indian Commodity Exchange, or the ICEX. It's interesting to note that the National Stock Exchange, or the NSE, and Bombay Stock Exchange, or the BSE, also started offering commodity trading back in 2018. Now let's talk about how the commodity markets work. There are two main types of commodity markets, the physical market and the virtual market. In the physical market, traders exchange goods directly. And in the virtual market, transactions are completed online, offering flexibility and accessibility. Within these markets, trading happens in two primary ways. The spot market, where commodities are bought and sold for immediate delivery. For example, buying gold in the spot market means you get the gold right away. The other is the futures market, where traders buy and sell contracts to deliver a commodity at a future date for a predetermined price. This setup allows you to lock in prices now for items you will receive later. Why trade in commodities, you might ask? There are several reasons: diversification, hedging against inflation, and profit potential. Commodities can be a great way to diversify your investment portfolio, since they often behave differently than stocks and bonds. Items like gold often retain their value over time, making them a good hedge against inflation. And of course, understanding the market can open up opportunities for profit. But remember, commodities can be highly volatile. Proper research and risk management are crucial. To start trading in commodities, educate yourself first. It's crucial to learn as much as you can about the commodity market. And once you're ready, you'll need to choose a broker and understand the different type of contracts, such as futures and options, each with its own level of risk. And for those just starting, consider beginning with a small investment. Many brokers offer demo accounts where you can practice trading with virtual money. This is a great way to test your strategies without financial risk. Develop a trading strategy, monitor the market, and most importantly, stay informed. That's all we have for today. We hope you found this video informative. Don't forget to like, subscribe, and hit the bell icon for more updates and educational content. Share your thoughts or questions in the comments below, and let's keep the conversation going.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.